Hey there, investorholics and friends. Welcome to the ETF Spotlight Review. Today we'll be looking at USD, which is the BetaShares US Dollar ETF. Shout out to Michael Papp. This is a request for him, so I'm just sort of updating this one. If you're interested in looking for a simple, low-cost way to access the performance of the US dollar relative to the Australian dollar, then this ETF might be worth taking a closer look-see at. A fund like this can be used to introduce a regional, sector or asset class diversification to your portfolio. Hang around, I'll give you my view on how you might want to use this. I think just a good little overview. Hey there, investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, USD aims to track the performance of the US dollar against the Australian dollar. So if the US dollar goes up 10% against the Australian dollar, USD, the ETF, is designed to go up 10% as well. Conversely, if the US dollar ETF will go down if the US dollar falls against the Australian dollar, so you're really buying the fluctuation between the Australian dollar and the US dollar with this ETF. As always, we need to have a why. Why do we bother doing it? So, potentially this is a simple, convenient Australian US dollar exposure. The ETF can be bought and sold like any other share on the ASX, avoiding the inconvenience and complexity of opening a foreign currency bank account, trading CFDs, or dealing with FX markets. A pretty low cost. We'll have a look at the cost later on. For most investors, the total cost of ownership can be expected to be significantly cheaper than many alternative ways of getting exposure to the performance of the US dollar. Portfolio diversification. Diversification is always hammered home to investors for what it's worth. So the portfolio diversification, so currency exposure can diversify your portfolio, as currencies historically have shown a low correlation to shares and most other major asset classes. That's why potentially you hold some bonds and some commodities or whatever as well, because they're non-correlated assets. So we had a net asset value when I did the research of $14.21. I was trading just above that at $14.25. Market cap of 147 million. Not the largest, but not the smallest ETF out there in the Australian market anyway. Management cost is 0.45%. Not too bad, but you think, for what these guys are actually doing, it might be a little bit cheaper. Annually, but it hasn't paid a dividend since 2020, I'm pretty sure. So currencies have historically exhibited low correlation to performance of shares. The USD ETF can provide an effective diversification opportunity if that's sort of what you want to go, the way you want to go. So trying to reduce risk in your portfolio, there might be easier ways to do that than having 27 different ETFs, but anyway. So let's give a bit of an overview on how this is structured. So one of the most appealing features of the BetaShares currency ETF is a simple structure, if I can get my words out. The ETF's assets are invested in bank deposit accounts denominated in US currency, and any interest earned on the deposits is pretty much paid back to the investors. So like I said before, it hasn't paid a dividend for the last 18 months, 2 years. The structure allows BetaShares to provide investors with access to foreign currency performance at exchange rates that will otherwise only be available to large wholesale investors. So you sort of get, because the ETF is relatively large, you get the opportunity to be involved in that type of investment class at a reasonable price. But like I said, I think it probably could be cheaper for what they're doing. But anyway. So looking at performance, since inception, since 2011, if you bought it then and held it to date, you're not really making a lot of money, to be honest. Can you put your money in other places? Quite possibly. That might be the better strategy anyway. So currencies impact the world impacted by world events around the clock. So even small investors can sort of get in on this investment action if that's what they want to do. So currencies provide some measure of diversification for people who invest primarily in US securities. So if you're looking to sort of smooth out the lumps, alternatively, it can be used by traders. Take advantage of the relative currency strength by investing in global currencies. So I bought this one back in 2011 when the Aussie dollar was pretty high compared to the US dollar, and I sold it sort of 2021, sort of late 2021, made about 25% on it. I only invested a small amount of money in it. For sort of 10 years of waiting was probably not worth the hassle. I probably should have put the money somewhere else. It would have been better stock or a better ETF or something. But anyway, I think if you're interested in gold or currency, you could probably have maybe 5% in your portfolio. And as I kind of touched on before, again, I keep going on these sort of things. Currency and gold and those sort of things are typically non-correlated to the broader equities market. So when one's up, the other one's down, and when the other one's down, the other one's up. So smoothing out those lumps and bumps in the market cycle. So in general terms, having a reasonable proportion of non-correlated assets in your total portfolio is typically a sensible strategy, as this approach will smooth out your long-term returns. So you might not get the highs, but you definitely won't get the lows, so you don't have to recover as much. This is a little bit like the approach Ray Dalio uses, and he has his all-weather portfolio. So I kind of use the all-weather portfolio in my superannuation, that type of mix in sort of broad terms, but I don't bother with currencies or gold in it. I just have the other one, the rest of the components. But I think that's each to their own. But yeah, if you are interested in currency, maybe have a closer look, and there are other currencies you can trade, euros or pounds. So I'd have a look at all the alternatives. One of the other ones might be turn out to be better value. So anyway, I hope this was a little bit educational for you guys, and hopefully you hit the like and subscribe, and hang out for the next one. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your financial horizon and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.